Hello, this is TJ with the PTU Trend Jumper. Welcome to the Trend Jumper Special Free Edition training video. In this video, we're going to learn how to trade the crossover trade. It's a special Trend Jumper setup. And we're going to be applying it to the Dow Emini 5-minute chart. We're going to talk about the indicators, the premise behind the trade plan, the rules of the trade plan, and then we're going to look at some examples. So let's go ahead and jump right in. The Trend Jumper is a very simple strategy. This particular trade plan is comprised of the jump line, a second faster jump line, which is also known as the confirmation line. That's what I'll be referring to it as throughout this video. A 14 exponential moving average, and the Trend Jumper calculator that has been pre-tuned and set up for the Dow Emini 5-minute chart and this specific trade plan. Begin by setting up a 5-minute Dow Emini chart. You can use a continuous chart or the front month. This red dotted line is the jump line. This is the indicator that drives the entire Trend Jumper strategy. Notice that when you click on any bar, you will see the reading of the jump line value in the data window. The data window is a very powerful tool, as you will see as we progress through this training video. The second indicator I want to introduce you to is another jump line set to a faster speed. This is called the confirmation line. I've colored it in white so that you could easily see it in contrast to the red dotted jump line. This light purple colored line is a 14 exponential moving average. And the final indicator is the calculator itself. The calculator is what prints the actual trade on the chart, like this one here. By merely clicking on the bar where you see these dots, you get the entire trade laid out in the data window. The plus sign, all these plus signs here, those are entries. And anytime you see an entry below the red dotted line, below the jump line, that's always going to be a short trade setup. Anytime you see one above, that's going to be a long setup. The dots above the little plus sign, those are targets. We'll talk about that in a little while. And the dot below, that's your stop. The entire trade is laid out in front of you. All the numbers line up in the same order as the dots that line up on the chart. For example, on this short trade on the right, you can see the stop, the entry, and the targets. Notice on the data window, the numbers are lined up the same way. Stop, entry, and targets. In a little while, we'll get into the rules of how we actually use these setups to trade this strategy. The Trend Jumper is a pure price action methodology that is designed to find short-term support and resistance levels from which to jump off of. We will not be utilizing the Trend Jumper's signature jump trade with this trade plan. Instead, we will be focusing on a very different type of trade setup called the crossover. The crossover trade is a very specific Trend Jumper setup that is designed to take advantage of turning points in the market. It is a combination of this setup, in addition to the rules of the trade plan itself, that makes this a very effective approach to trading the Dow Emini with the 5-minute chart. Okay, next up are the rules. You're going to see how fast this goes. It's actually very simple. Rule number 1 is that in order for there to be a setup, the confirmation line, the faster moving jump line that's solid and colored white, must cross over and close on the other side of the actual jump line, which is the red dotted line. Once that occurs, for long trades, the first green bar to close above the jump line is the setup bar. For shorts, it would be the exact opposite. If the confirmation line closes below the jump line, then the first red bar to close below the jump line is the setup bar. It could actually be the same bar. It could be the same bar as when the confirmation line closes above or below the jump line. Let's take a look at some examples. Take a look at the trade setting up on the right edge of the chart. Notice that the confirmation line has come from below and crossed up above the red dotted jump line. And it was even on the jump line for a bar. Okay, remember it has to close above. Notice on the very same bar where it closed above, you have a green bar. This is your setup bar. And the calculator knew that and it printed a trade setup. A pretty good one. Check out this short setup. You'll see the confirmation line is above the red jump line, and if it's hard to see, you could always just click on the bar and you see the reading. Notice that the white jump line, which is the confirmation line, is at 14,594, and that's above the actual jump line itself, which is at 14,593. Then it crosses below. As soon as it closes below, the first red bar is your setup bar, right there. Notice on the very next bar it did not trigger in. In fact, it took 3 bars later before it actually stabbed down and triggered into the trade. We're going to talk about entries in a little while, but it can take more than 1 bar before the trade actually triggers in. The trick is to know when the trade actually becomes invalid and the setup needs to be canceled. Again, we'll discuss that shortly. This turned into a pretty good trade as well. We're going to look at some trade setups, and you're going to see this playing out over and over again, but it really is as simple as that. The crossover trade is very easy. All right, let's continue with the rules of this trade plan. The crossover trade is actually a breakout style trade setup. It wants additional confirmation before actually triggering into the trade. The final thing that has to occur is that the price needs to move 2 ticks beyond the high of the bar for longs or the low of the bar for shorts to actually get into the trade. We also have to consider key level adjustments, which I'm going to explain thoroughly a little bit later. Notice on the short trade that we just looked at, the low of the bar is 14,563. Notice that the entry prints at 14,561. 2 ticks below the setup bar. Sometimes it will show you other setup bars, setups that actually occur while a prior trade is still in progress. We're going to ignore those setups. With the full version of the trend jumper, sometimes we're going to actually use those setups to add to our position so that we can build a larger position and take advantage of greater trends. But for this particular trade plan, we are not using add-on trades. So if you're currently in a trade and you see an additional setup, just ignore it. While we're on the subject of key level adjustments, let me quickly explain to you what they are. There are 2 types, price-based and chart levels. And the price-based actually have 2 levels as well, minor and major. The minor key level adjustments are designed to get us around 5s and 0s. The major key level adjustments are to get us around 50s and 100s. We have found that these price levels often put up short-term psychological barriers that can actually stop the price action in its tracks. Not always, of course, but enough to where we want to adjust our entries and our stops around them. Chart level adjustments are easy to see on the chart. We want to make very small adjustments to force the price through an obvious swing level for extra confirmation before getting long or short. And we could hide our stops around these swing levels as well. This may seem a bit confusing at first, but once you see a few examples, you'll see how easy it is. Remember, minor key level adjustments are around 5s and 0s. So for long entries, if the price lands on a 4 or a 5, we're going to adjust our entry to the 6. If it lands on a 9 or a 0, we'll adjust it up to the 1. And of course, it's the opposite for shorts. If it lands on a 6 or a 5, we'll adjust it down to the 4. If it lands on a 1 or a 0, we'll adjust it down to the 9. Major key level adjustments work the same way, but we adjust around 50s and 100s, and we get into the adjustment a little bit sooner. For long entries, if it lands on a 48, a 49, or a 50, we'll adjust it up to the 51. If it lands on the 98, 99, or a multiple of 100, we adjust it up to the 01. And of course, for shorts, it's the opposite. If it lands on a 5.2, a 5.1, or a 50, we adjust it down to the 49. If it lands on an 0.2, an 0.1, or a multiple of 100, we adjust it down a tick to the 99. Let's look at some examples. Remember I said on this last short trade that the entry was at 14,561? That was 2 ticks below the low. But if you'll remember from the last couple slides, if a short entry lands on a 1, in this case 14.561, we're going to adjust it down to 14.559. We're not going to get short at 61. We always have to remember to adjust it down a couple points to the 5.9, and that's going to be our entry price. On many occasions, this will be enough to save us from a losing trade. Notice that the stop is at 78. We're not going to make an adjustment on this stop. This is a minor key level. If the stop was at 79, then for sure we would adjust it up around the 0, and we would put the stop at 14.581. See how that works? This will all make more sense to you as we look at more examples. Chart level adjustments are a whole different matter. The basic rules are we want to make very small, minor adjustments only. Typically 1 or 2 ticks, sometimes 3, rarely 4. If I'm going to make a 4-tick adjustment, it's usually around some other key level as well. If you can't see it, it isn't there. Every time you make an adjustment, you're taking a little bit away from your profit potential and you're adding a little bit more risk to the trade because it can still break through the support or resistance, trigger you in, and still turn around and go the other direction and stop you out for a bigger loss. Nothing is perfect. We don't need to be perfect. All we need to do is avoid some losing trades or stay in a trade a bit longer by making an adjustment around a key level. We just don't want to overdo it. You don't want to be afraid of the trade. If the adjustment is too large, don't make it. Just go with the printed trade as is. Remember, support and resistance levels are broken all the time. We're not trying to avoid losing trades. We're just adding a little bit of mitigation and trying to avoid some bad trades. That's enough to be very successful with this strategy. And as far as targets go, I usually will not adjust my targets. But if it's very obvious, if there's a very strong support and resistance level, and all I have to do is move my target up a tick or two, I'll probably do it. But I'm not going to do it around minor levels. My general rule is I don't adjust my targets. There is another thing that I do in regards to key level adjustments, which I want to mention now. Sometimes you will see various key level adjustments, one right after the other. And if you adjust to one, you'll see another one right on top of that, another one right on top of that, or below for shorts. I call these layered adjustments or layered support and resistance levels. Typically when I see this, I'm not going to make any adjustment at all, or I'm just going to make one small minor adjustment, 1 or 2 ticks only, especially in a sideways market. Also, it could be that a trade has already broken out, like on a short trade, it might have gone below a key level or a major chart level, and then all of a sudden your entry is a short at a 6. If it's already in a clear space on the chart and there are no other support levels clearly below it, in that case I'm typically not going to make the small adjustment. This is just part of the 5% art to trading. The more you use this strategy, the more you'll see this work. It's only common sense that after a few months of using this approach, you'll just get better at it. There's no substitute for experience. Okay, we haven't talked about what cancels a setup. It's really simple. If the confirmation line closes back on the other side of the jump line before triggering in, the setup is canceled. If it closes on the jump line, that does not cancel the trade. It has to close on the other side to cancel the setup. If we're getting in sync with an earlier setup, the trade would be canceled if the price has already hit its stop or a money management level prior to our start time. In other words, we can't get in sync with the trade if it's already progressed to the point where it's hit a money management level, or obviously if it's stopped out. Okay, so now that you understand the crossover trade and how we handle entries, let's talk about the actual trade plan itself. We'll also talk about our targets, stops, and how we manage the trade as it progresses. This particular trade plan was actually designed as a 3-position approach, but you can trade it with a single position or with 2 positions as well. You can start with one and build up to the other 2 positions as you grow your account. It really depends on how much trade capital you have available to you. Remember, risk management is critical to success in trading. Never put on more than 2% risk on any trade. The start time is at 8:20 Central Standard Time. The Dow Emini is traded from the Chicago Board of Trade. So we set our charts to exchange time. All right, if you're on the East Coast, that would be 9:20 your time, okay? We're going to use a concept called the power of quitting, and we're going to quit when we've achieved one full winner and a positive result. We'll talk about the power of quitting in a moment. Only take a maximum of 4 trades per session. If you win on the first trade, you're done for the day. If the first trade's a loss, you take another trade. If that trade gets you positive and you hit your full target, you quit. If you're not positive, you take a third trade. Sometimes it might take up to 4 trades to get positive. On a rare occasion, you might not be able to get positive at all. That's okay. Every now and then we're going to take a step backwards. Successful trading is typically 2 steps forward, 1 step back. Don't try to be a hero. You're done for the day. Just show up and take your trades tomorrow. The power of quitting is a NetPicks goal setting strategy. It actually dynamically adjusts to market conditions. It allows us to take what the market wants to give us instead of what we want from the market. The market doesn't care what we want. If we can be flexible and take what the market wants to give us, we can quit positive on most sessions and grow our accounts steadily while also minimizing risk exposure. The power of quitting is a very important part to this trade plan. The targeting is quite simple. We're going to take our first position off at the second target. We're going to exit our second position at the third target, and we're going to trail the 14 EMA with our third position. I'll talk about how we trail in a few moments when we talk about the trade management part of this strategy. If you're only trading a single position, you're going to want to exit at the second target. Once you're able to add a third position, you'll want to exit that at the second target. Finally, when you've grown your account to a certain level, you can add a third position and trail the 14 EMA. Let's talk about trade management. Once you've triggered into a trade and the price has hit the second target, you want to move your stop to lock in 1 tick of profit. This is going to cover the cost of your commission on your other 2 positions. If you're only trading 1 position, you want to continue to track the trade as if you were trading the other 2 positions. Only when all 3 positions have come off that trade do you want to start looking for a second setup. That's very important. So if you only come off with 1 position and that's all you're trading, you don't take the very next setup if the second and third positions would still be going. Okay? Let the full 3 position trade finish before you start looking for a second trade. So not only do you want to lock in 1 tick, but you're also going to begin trailing the 14 EMA. There will be times when the 14 EMA will have you locking in more than 1 tick of profit because it would have progressed further along. Other times you'll just be locking in the 1 tick, and then a few bars later you'll be trailing the 14 EMA. Okay? The one exception, or the one caveat that you have to remember, is that the second target has to be 10 ticks or greater if you're going to activate the trade management at that level. If the second target is less than 10 ticks, then you need to wait for the price to hit that second target but also reach 10 ticks. At that point, you can activate these trade management techniques. This is also very important. Sometimes trades need more time to develop, and you don't want to get stopped out too soon. And like most rules, there are some exceptions, so let's talk about some of the special conditions. Nothing's perfect in the markets. Sometimes a trade setup is just extremely small. I forgot to mention that a doji, a price bar that has no body, that's a neutral bar, but it actually counts as a setup bar. So you might get a long trade that isn't a green bar for your setup, but is actually a doji. You can still take that trade, and the calculator knows this. Here's the general rule. If the middle target is less than 8 ticks away, then you're going to use what we call the tiny trade rule. If it's 8 ticks, you're going to take your profit at that level. You're still not going to move your stops. You still have to wait until the price has gone a full 10 ticks before you lock in a tick of profit and begin trailing. Unless it's getting you to power of quitting. Okay, if it's getting you to the point where you're actually positive on the trade and you can quit the session positive, that's the only exception. You definitely want to get to positive and quit for the day. It's just going to be a modest session. That's okay. Tomorrow is always a new session. Getting to power of quitting is your top priority. Sometimes, though, when you get a really small trade, it's not worth taking if your target is less than 8 ticks away and you take your target at that level. Okay, your risk is too great. So here's the rule. If the middle target is less than 8 ticks, you're going to exit your first position with a 15 tick profit. You're going to exit your second position at 25 ticks, and you'll trail the third. Remember, as soon as a price has gone 10 ticks, which is going to be past that middle target, that's when you're going to lock in a tick and take the risk off the trade. Okay, that rule does not change. And again, when we look at some examples, you'll see this in action. It's really quite simple. These trades can turn into really big gains sometimes, and you don't want to ignore them. There are a few more special cases too, but I've printed them up in a PDF file, and you could review them at your leisure. Let's go and take a look at some examples. Whenever I show the trend jumper at webinars, I always like to look at this week's trades. Today's trades. What are the trades that are the most current? So with this first set of examples, we're going to go ahead and walk through this first week of April's trades, because this is when I'm actually recording this training series. All right, let's pay attention to the trade setup on the right. You can see the confirmation line went from below to above, and even if you don't remember that, the calculator knows it because it prints a setup. Because it's above the jump line, it's a long trade. Do we have to make a key level adjustment? The entry is at 14,501. If that was a short entry, yeah, we'd have to adjust that down to 14,499. But it's a long entry and it is already above the key level adjustment. So we can go ahead and place an order. Notice that the target is at 14,507. That's less than the minimum size trade we need. We need it to be 8 ticks. It's only 6 ticks from the entry, okay? So if we trigger into this trade, we will come off of our middle, we'll come off with our first position 15 ticks above our entry at 14,516. We'll come off at 14,526 with our second position, and we'll trail the EMA, okay? Let's see what happens. Notice that it comes down, you have a red bar, it looks like it might cancel, but notice that the jump lines are on top of each other. We do not have the confirmation line closing below the jump line, so the trade is still valid. And then all of a sudden we get a big green bar, it triggers in, and it zooms higher. At 14,516, we're coming off of our first target right there. At 26, we're coming off with our second target. Once this has moved up 10 ticks, even before it got to that first level, we're going to be locking in. It's going to be right here. We're going to be locking in a tick of profit. Okay? And then it comes down and the trailer stops out. This entire trade netted 41 points, and we are one and done. This is the power of quitting. In order for the power of quitting to qualify, we need to have hit our middle target, and if it's a minimum trade, we need to have hit our 15 plus target. Okay? In fact, I don't even count any winning trade if the middle target is less than 15 points for power of quitting. And in this case it was, because that is where we take off that first position. So let's go on to the next session. All right, here we are on the 2nd of April. Notice that that we have a short setup at 8:25. Look at the entry, 14.536. Now we know from the training that we're not going to get short at 3.6. We're going to get short right there at 3.4. We're going to make a minor key level adjustment. Notice that it does stab down, and it would have hit 3.6, and then it's rejected and it goes up, and we avoid a losing trade. The trade cancels because, well, the confirmation line ends up closing above the jump line, and in fact we get a long setup. This one is at 14.565. We make the adjustment up to 6.6, and that one triggers in. It quickly goes to the middle target. That middle target's at 14.581, and that's good for 15 points. So that meets our minimum qualification for power of quitting. Now all we have to do is manage the rest of the trade. The second position comes off at the third target, and then we continue to trail. Remember, we're going to trail the 14 EMA, and that continues to go up until here, at which case it stops out. Look at the reading on this line. It's at 14.594. We're going to round it down to 94, and then we're going to follow 2 ticks below. So we're going to stop out at 14.592. Now, we always have to wait for the bar to close before we read where the EMA is. Okay, if the bar happens to close below the EMA and we still haven't stopped out, we ignore that. We keep the stop where it was. We base it on the last bar to close above the EMA. And for shorts, we base our reading upon the last bar that closes below the EMA. All right, so this is the last bar to close above it, right there. The reading gets rounded down to 94. We put our stop at 92. This entire trade nets 62 points. And again, first trade, power of quitting, done for the session. Let's go to the next session. All right, here we are on April 3rd. Notice that it's at 8:15. We get a setup. We're going to try to get in sync with this setup. The entry's at 585. We'll adjust it up to 586. And notice that it's a very small trade. The target's only a couple ticks higher. So we're going to ignore the targets, and we're going to set our 15 and 25 tick target levels. And it does trigger in right here at the open, and it zooms up. And we're able to pick up a nice target. Goes 15 ticks from 86 to 601, right about here. Okay, we're going to quickly move our stop up and lock in a tick, and it's going to come down and stop out our other 2 positions at 14.587, right? 1 tick above our entry. So this trade gets us 15 ticks to the middle target and only 1 tick each for our other 2 positions. But that's our minimum size trade for power of quitting, and we just won our 3rd session in a row. Let's go to the next session. This session actually takes a little bit longer for a trade to set up. It looks like we're going to get a setup here, but we don't, and the reason why is because of the 14 EMA. The 14 EMA actually acts as a filter. We never trade against it. Notice that if we were to get long here, the entry would be at 14.499. We would adjust it up to 501, and that is below the EMA. Okay, so that's an exception to the rule. We don't get long if we're trading against the EMA and we can't get our entry above it. All right, and we do miss a nice trade. Now, you could make a key level adjustment by moving this up above the EMA. That is optional, and then you can just trail one of these lines or use your 15 and 25 tick target level, okay? But that's not part of the trade plan. The confirmation line ends up closing on the jump line but never gets below it again to cross over long, okay? So unfortunately, not everything is perfect. If we could have started trading earlier, we would have had a nice trade, but that's not part of the trade plan either. So we're still waiting. Here's a setup here, but this one's going to end up canceling. Then we get a short trade. That one's going to end up canceling. Finally, we get this trade. and it's a short at 14,490. We're going to get short at 89, and it just barely triggers in. It comes down, and it doesn't quite hit our second target. Okay, instead, it comes back up, and we get a long trade, and we have to stop and reverse our position to long. And that one gets long at 91. So this short trade ends up losing 2 ticks per position. Okay, we get long here, and that one ends up turning around and going the other direction too. We have to take another loss. This one here, the entry is at 81. We adjust it down to 79, which happens to be where the stop is on the long trade, you see? So we end up getting short here. And that one's going to stab down. This trade is big enough to qualify. The middle target is at 70. Remember, we got short at 79, so it's 9 ticks. So we're able to take our profit here for 8 ticks, and then we lock in 1 tick on the remaining 2 positions. So we're still not positive for the session. We've had 2 small losses and 1 small winner. We need to take the 4th trade. We have a long trade that sets up. This is at 12:30 in the afternoon. Sometimes these sessions can go a little long. They're 5-minute bars. You just have to be patient. It triggers in, has no problems getting to the full target from 14,496 up to 14,511. Gets to the 3rd target to 14,517. That's good for 16 points here, 22 here, and now we're trailing the EMA. And that goes all the way to here, and then it comes down and stops out 2 ticks below the last bar that closes above. The reading's at 14,520. We stop out at 14,518. And that whole trade is enough to get us to power of quitting, and these 4 trades yield us 30 points, and it's our 4th winning session in a row. Now, there's something I want to bring up, and that is sometimes you get really long bars. That's the nature of a time-based chart. You always have the option to use these other lines here to lock in greater profit if you want. Okay? If you have a spike move and you have a gift from the trade gods, or if you're trading more than 3 positions, you can always trail the confirmation line. You can trail the jump line. Okay? This is a very flexible trade strategy. All right, let's go on to today's session, Friday's session, and see how the week finishes up. All right, so again, we have to be patient. We have a long setup here. It never triggers in. Notice this time it showed up because the entry's on the other side of the EMA. Another long trade. Both of them canceled. Here's a short trade. That one canceled. Finally, the 4th setup gets us long at 925. The entry is at 14,391. We're trying to get to 14,412. That's within our limit, so we're going to take that exit at the 2nd target. Once we've gone 10 ticks, we're locking in. We've hit the 2nd target. And we take the next position off at the 3rd target. We continue to trail, and we finally stop out here. 14,418. The stop would go to 16. But we don't take the stop at 16, do we? We push it down below the key level, and we're going to put the stop at 14,414. Okay? And so we get 21 ticks to the middle target, 29 ticks to the 3rd target, 23 ticks on the trailer. The entire trade nets us 73 ticks. We won 5 sessions in a row, and we get to finish the week with 223 ticks, or 223 points at $5 a point. That's it. That's the trade strategy. Now, I've been tracking and trading this strategy for quite a long time, and this is pretty much how it works. Not every session is going to be easy. There will be times when you will lose 4 trades in a row, although it is rare. Basically, this is winning over 80+% of its sessions and 80+% of its weekly totals. So if you just stay with the strategy and keep your risk very small and trade responsibly and stick to the plan, you'll do great. I'm going to go back and show you one more example. I want to show you a spike move. Here's an example where you would want to maybe use a jump line instead of the EMA to trail. Okay, it's 8:45. You got this short trade here. You've already come off a small loss. You'll notice that this one spiked up and stopped out. You're taking the second trade, and the entry is at 14,306. Okay, you've also broken below any key levels. Okay, at 306, I don't need to force that down to 304 because that's just going to put us 4 ticks on top of 300. So I'm okay getting short at 306 without an adjustment. Okay, you're pretty much in a bunch of open space and there's really nothing else to adjust around. Okay, that's how I do it. You may choose to go to 04, and if that's what you want to do, that's fine. Notice that it goes to the second target, hits the third target, and those are nice size trades. 17 ticks to the middle target, 24 ticks to the third target. Okay, and then the price spikes down, and it even spikes down again. And notice how the jump line is moved far away from the EMA. You can let this come all the way back up and stop out up here if you want, and sometimes that'll keep you in a bigger move. However, you already had a losing trade. By the way, this lost 9 ticks per position, so you're down 27 points. You want to get to power of quitting. Okay, not only that, but this is a pretty generous move. The entry at 306 gets pretty far down. It goes all the way down to 266. I mean, that's over 40 points. That is 40 points. Do you want to let it come all the way back 40 points? You have the option, when you see it spiking like this, to work around the jump line and instead get out right around in here. In fact, you could even work around the confirmation line, except that you don't have any bars closing below it. Actually, you do. You have this one. So you could even get out above the confirmation line right about there if you want. Okay, that's definitely an option. All right. If you got out above the jump line, it's the last bar to close below it. So this green bar, you don't count that because that closed above it. The last bar to close below it is this one. And the jump line's at 89. You would put your stop at 91. And that's where you would take your exit. Okay? That's when you have a big move and you don't want to give back all that profit. Sometimes the EMA takes a little bit longer to catch up to the price. Now realize you may be cutting yourself out of a bigger move. That could happen. So you have to just use this idea judiciously. And again, the more you trade the strategy, the better you're going to get at it. All right. We cover this and a lot more in the Trend Jumper Owners Club, which is a private membership for Trend Jumper owners. If you like this approach and you like the Trend Jumper strategy, then you're certainly welcome to move up to the full Trend Jumper and join us in the live trade rooms. Obviously, there are lots of ways to trade the Trend Jumper. I've only shown you the crossover trade. Hopefully you enjoy it. Follow the trade plan, and it should be very successful for you. Thanks for joining me, everybody. This is TJ with the PTU Trend Jumper. Hope to see you soon.